Ever wondered how to turn a small investment into a $100,000 portfolio? Most people think you need a huge salary to invest, but the truth is, you don't. In this video, I'll show you exactly how to build a six-figure investment portfolio from scratch, even if you're starting with just a few dollars. Make sure to watch until the end because I'll share my top investing strategies that help me grow my portfolio, and they can work for you too. The first step to building a $100,000 portfolio is to set a realistic goal and timeline. Okay, I know what you're thinking. Building $100,000 doesn't happen overnight. You're right, it doesn't. But it's easier than you think with the right approach. For example, if you consistently invest $500 a month with an average 10% annual return, you could hit $100,000 in less than 10 years. The key here? Consistency plus smart investing. Remember, investing is a marathon, not a sprint. Let me show you exactly what I mean. Imagine you're 25 years old and just starting to invest. By contributing just $200 a month to a Roth IRA invested in a low-cost S&P 500 index fund, you'd have over $1 million by the time you retire at 65. That's the power of compound interest over the long term. Now, I understand that not everyone can contribute $500 a month right off the bat. That's okay. Start small, like with $50 or even $25 a week. The important thing is to develop the habit of investing regularly, no matter the amount. Remember, even if you start with a small amount, your investments will grow over time thanks to the magic of compound interest. It's basically earning interest on your interest. Over time, this effect snowballs, leading to exponential growth. So even if you can only invest a small amount right now, don't get discouraged. Start small, stay consistent, and watch your money grow. Setting realistic goals and timelines is crucial. For instance, if you aim to save $100,000 in 10 years, break it down into smaller, manageable milestones. Celebrate each milestone to stay motivated and adjust your strategy as needed. Case studies show that those who set clear, realistic goals and timelines are more likely to achieve their financial targets. So, start today, set your goals, and take the first step towards building your $100K portfolio. Now that you have a plan, it's time to choose the right investment vehicles. And let me tell you, not all investments are created equal. In this chapter, I'll break down where to put your money for maximum growth with minimal risk. One of the best investment options for beginners is index funds and ETFs, especially if you're looking for passive growth. A great example is the S&P 500 ETF, VOO, SPY, or VTI, which has historically yielded an 8 to 10% annual return. They're perfect for beginners who want diversification without picking individual stocks. Another great option is dividend stocks. These are stocks of well-established companies like Coca-Cola, Johnson & Johnson, or Apple that pay consistent dividends. This means you earn passive income while your portfolio grows. Now let's talk about real estate. You might be thinking, I don't have hundreds of thousands of dollars to invest in real estate. Guess what? You don't need that much. You can start small with REITs, real estate investment trusts, like VNQ. With REITs, you can own real estate with as little as $100. And of course, we can't forget about crypto and alternative investments like Bitcoin and Ethereum. While they offer the potential for high rewards, remember that they also come with high risk. Only invest what you can afford to lose. Remember, diversification is key to a successful investment strategy. By spreading your money across different asset classes, you lower your risk and increase your chances of achieving your financial goals. Diversification equals lower risk, more stability. Chapter 4, Step 3. Increase your contributions over time. It's simple math. The more you invest, the faster you hit $100,000. But how do you increase your investments without feeling broke? Let's explore some options. One way is through side hustles. Think freelancing, online businesses, or passive income streams. These can provide extra cash flow to fuel your investments. Another strategy is to cut unnecessary expenses. Those daily Starbucks runs and unused gym memberships can add up. Redirect that money into investments instead. Trust me, your future self will thank you. If you can increase your monthly investments from $500 to $800, you'll reach $100,000 in just 7 years instead of 10. That's the power of consistent contributions and the magic of compound interest. Even small increases in your contributions can make a big difference over time. So, review your budget regularly and see where you can cut back and invest more. Chapter 5. Stay consistent and don't panic sell. The stock market is a roller coaster. There will be ups and downs, but the key to hitting $100,000 is to stay consistent and avoid emotional investing. Remember, you're in it for the long haul. The worst mistake you can make is buying high and selling low out of fear. This is called panic selling, and it can seriously derail your investment goals. Think about it like this. Would you sell your house just because the value dipped slightly for a few months? Probably not. The same logic applies to your investments. Instead of panicking when the market dips, view it as an opportunity to buy more at a discounted price. Remember, the stock market has always gone up over the long term, and this time is no different. As the legendary investor Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. Be patient, stay the course, and you'll be rewarded in the long run. For example, during the 2008 financial crisis, many who held on to their investments saw significant recovery and growth in the following years. Consistency and patience are your best allies in building a robust investment portfolio. Outro: start building your $100,000 portfolio today. So there you have it. Everything you need to know to build a $100,000 investment portfolio from scratch. Remember, it's not about getting rich quick, it's about making smart, consistent investments over time. What's your biggest challenge when it comes to investing? Drop a comment below. If this video helped you, smash that like button and subscribe for more investing tips. Start today by setting up your investment account, researching stocks, and making your first investment. In this chapter, we'll discuss the importance of diversifying your investment portfolio. Diversification helps to spread risk and can lead to more stable returns over time. By not putting all your eggs in one basket, you reduce the impact of any single investment's poor performance on your overall portfolio. Let's start with stocks. Stocks represent ownership in a company and can offer high returns, but they also come with higher risk. Balancing your stock investments between different industries and companies can help mitigate some of this risk. Next, we have bonds. Bonds are essentially loans you give to companies or governments, and they pay you interest over time. They are generally less risky than stocks and can provide a steady income stream. Real estate is another asset class that can add diversity to your portfolio. Investing in property can offer both rental income and potential appreciation in value. Real estate investments can also act as a hedge against inflation. Lastly, commodities such as gold, oil, and agricultural products can add another layer of diversification. These tangible assets often move differently than stocks and bonds, providing a buffer in times of market volatility. The key is to find the right balance that aligns with your risk tolerance, investment goals, and time horizon. By diversifying across these different asset classes, you can create a more resilient investment portfolio. Stay tuned for more tips and strategies to help you achieve your financial goals. And remember, diversification is not just a strategy, it's a way to safeguard your financial future. End of Scene 7.